The battle to tame inflation in the Eurozone is not over. That's the message from European Central Bank Chief Christine Lagarde. She's been outlining plans to combat price growth at a major banking event in Portugal. Measures include dampening consumer demand and forcing firms to curb prices. Well, Daniel Gros is director of the Institute for European Policymaking at Bocconi University in Milan. Welcome to the programme, Daniel. So we have, of course, seen most countries making many rate rises, but Christine Lagarde says inflation may not have peaked and could linger. Do you think that central banks were too slow to act over this?
I think all central bankers now admit that they were too slow last year, but bygones are bygones. Now we have to think about what to do now. And there I think Lagarde also is not very sure whether inflation will come down on its own or whether she will do much more. That's why she kept all options open.
But the priority has been getting inflation down, hasn't it? Do central banks risk causing other problems, though, by making this their priority?
They have to stick to their priority because they were made independent with one mission, to keep prices stable. And they cannot fail that mission, otherwise their independence would be gone. So even if they are at times very unpopular because they slow economic growth or create unemployment, their job is to be unpopular, but in the end to keep prices stable.
Well, as you say, that raises the spectre of a slowing growth, potential recessions. Do you think we will see those in the Eurozone?
I think it is likely that the Eurozone actually is already in a sort of recession or very slow growth. It is being saved for the time being by the fact that energy prices have come down a lot from the heights we have seen last year. And therefore now we have two forces operating on the European economy. The central banks increasing rates, but consumers have more money in their pocket because energy prices go down. The two might equalize each other, but certainly there's very little room for strong growth.
So as you say, Christine Lagarde keeping her options open, a suggestion, though, that rate rises aren't over. When do you foresee things easing? How long does it take for policies put in by central banks to start working?
The policies which the ECB and other central banks started putting in place last year will only start operating now. So that's why the central banks are hesitating. What they're seeing today, they don't know whether that is also the effect of what they already started doing last summer, or whether they have to wait a little bit more. So given these very long lags, I think the central banks will have to sit on high rates for quite a number of months more.
When it comes to making policy, though, how difficult is it to formulate a policy for several different countries with different requirements?
That is actually not so much a central problem now, because while inflation is very uneven across the euro area, with over double-digit in some countries and 2 to 3% in others, but the labor markets are going pretty well almost everywhere, and that is, of course, one key issue. As long as you have these strong labor markets everywhere, can the central bank really declare victory in the fight against inflation? And that, at the present, is their main issue.
Daniel Gros from Bocconi University in Milan, thank you very much for joining us.